Welcome back, everyone. Michael here with Offshore Citizen. In the last video, I posed the question to you to guess whereabouts it is that I am in the world. And so I am in Italy, in a small town called Barberino, which is one of the well-known shopping places. So I've mentioned in some previous videos, if you want to get the best shopping that I've found anywhere in the world, it's outside Florence, Firenze, a place called the Mall. They have like ridiculously good deals. And so I was there as well. There's also a few other places that can be pretty good. Andorra can be pretty good, etc. But yeah, these are, I would say Italy has the best shopping options available, so highly recommended. Now, hopefully some of you were able to guess fairly successfully, and yeah, good on you for those who gave it a shot. We will do another one in the next few days because I'm quite mobile right now. Anyway, today I wanted to just quickly touch on, there was some recent things that came out about Justin Trudeau and the Canadian government investigating wealth tax. And so I wanted to discuss kind of my perspective on what that likely means. I did have some clients asking about it. So I will share with you a bit about what I think is likely to happen, not just in Canada, but abroad, and some of the indications that we see from these leaked emails, etc. So let's dive in to discuss. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. If you'd like help with any of the subjects we deal with here, international tax optimization, residencies, citizenships, etc., please reach out to me. You can book a call or at calendly.com/Michael-Rosmer, link in the description below, or you can send a message through offshorecitizen.net. Okay, so as I said, the leaked emails are from just prior to the election in, I guess, 2021 in Canada, where they were asking to review the possibilities of a wealth tax. A bunch of the details of kind of the series of emails were redacted, so you don't really know exactly what all was discussed there. And there was a bunch of things related to confidentiality. However, we have seen a few different places who have done a push for a windfall profits tax. So this is basically companies that maybe made a lot of windfall profits recently would have to pay extra tax. I'm very much against this. Some people will say, oh, you know, but if they did well, why should people? It's like, well, because then are you compensating them on the other side where they do poorly? You kind of need both. Like, as far as I'm concerned, you can't take when they do well and not give when they do poorly. And I think generally we want the market to have a proper cleansing mechanism so that if a business does poorly, it goes out of business. And that makes things work well. And the consequence of taking on that risk is that they also should be able to get the rewards. So this goes for oil companies, etc. When energy prices soar, hey, look, you know, they're taking on that risk. Now, as far as wealth taxes in general are concerned, are they likely to come in? So there's been lots of talk in kind of the offshore space. I think kind of the fear factor has been around citizenship-based taxation, the idea that other countries aside from the US would bring it in. I've expressed numerous times that, in my opinion, this is highly unlikely in most of the world. There are examples of places that they make it hard for you to escape their residency depending on where you go. For example, countries like Spain, where if you move to tax havens, there can be issues, Spain, Portugal, some others. And so I do think there's a reasonable chance that that expands, that countries try and protect their base, not by doing citizenship-based taxation, but by saying, okay, if you move to these certain countries and you don't have a bona fide, employment opportunity or some specific reason that makes sense, then you're going to remain a resident here for, let's say, 3 years. That type of policy, which we already can see in a bunch of European countries, doesn't sound too unlikely to me. Obviously, it wouldn't apply to any of their treaty partners, etc., which is an advantage, say, of UAE, because UAE actually has a really extensive tax treaty network. Although, under some of those tax treaties, you can't be resident, or it's very difficult to have the tax treaty apply to you. It depends, country by country. Some of them it's fine, but some of them it's really tough. Now, this comes to the wealth tax. So, what they ultimately did, this was just before they released their policy, and the Liberal government ultimately decided not to go ahead with a wealth tax policy in their platform. The NDP did. The NDP, so basically the Liberal government won a minority and they needed to have the support of another party, which was basically the third party, which is the NDP, which is more socialistic than the Liberals are. Not that the Liberals aren't particularly socialistic, they are, but NDP is more so. And so the clear indication there is that they decided not to go with it. Now, they may not have done that for political reasons. They may have said, you know what, we want to avoid having people kind of reject us, big corporate donors, etc., because of this. That was probably reasonable. There's also a possibility that they rejected it based on practicalities. The reality is that pretty much everywhere it's been tried, it's been a dismal failure. And there's a lot of reasons for this. Like, theoretically, just in like a perfect world, if you wanted to have the optimal tax would be only a wealth tax. Eliminate all other taxes and just have a wealth tax, because of the fact that it is least distortive of behavior. It's kind of like most evenly and fairly distributed. Now, maybe you decide that you think that we shouldn't have something that is evenly distributed, that we want to incentivize certain behaviors, and that therefore we should tax higher in some area than others. That's a fair argument. But if we're just talking about what is the most likely to change people's behaviors, this is the least likely to change people's behaviors. And so therefore, if it could be applied perfectly, it would be least distortionary in the market. So in that sense, kind of makes sense. But the problem is we don't live in an ideal world. And so we have problems where, for example, you can't value private assets, really difficult. You would have to sell private assets in order to pay the taxes, which creates all sorts of problems. For example, if I now lose control of my company because I had to sell shares in it, and I was the one who cared, now the company performance goes down. There's all sorts of things like this that happen. So it's a really bad system. And what they've found in most places is they actually spend more money administering it than they do collect on it. So anyone rational who tries it tends to go away from it. This being said, let's be honest with what the narrative in the world is today. The narrative in the world today is that people who have a lot of money there's this growing wealth gap, and that has a big social political implication. And the truth is that raising income taxes don't really affect people who most of their most of their wealth is in assets. So you need some way of taxing those assets. And so hence a wealth tax is kind of the default suggestion. So I strongly believe that we will probably see some countries, such as Canada, whether it's Canada specifically or not, bring in a wealth tax. And so, I mean, that's to me partially a reason not to invest in some of those countries, to be honest with you, is that fear. So for example, France has sort of a wealth tax on real estate. Spain has a wealth tax, and it's a nightmare. I mean, these are negatives towards investing in property in Spain and France, let's be honest. I'm here in Italy. It's a little better here, although there is much to be desired in terms of the bureaucracy. That's a bit of a problem, so something for them to work on. And I expect that some other places will also bring these things in, just if no reason than political reasons and political pressure of kind of the mainstream narrative out there today. So I would be mildly concerned about it over, let's say, a 10-year period. Whether it's going to come out next year, probably not. These things usually take a while to roll out. But yeah, I think it's important to be aware of the fact that they are actively considering it. It is gone through a bunch of different reviews by a bunch of different groups. Doesn't mean they will do it, but I think that as the narrative continues, or to the extent that it does, which I think it probably will, it's very unlikely that we're going to correct wealth inequality and narrow that gap substantially over the next while. There's going to be increased pressure for this. So anyway, let me know what you guys think. Put it in the comments below, and I will see you on the next video.